Good morning, good morning. Hey, Chris. What are you doing up at 2:30 in the morning, brother? Raj, Ben, good morning, guys. Oh my God. Sandy, what's up? Oh, look at all my East Coast guys up at 2:30 in the morning. Well, Sandy never sleeps, so I know what he's doing. Chris, your wife's going to start wondering why you're always up at 2 o'clock in the morning. Oh, man. She's going to be, stop listening to that idiot. Come to bed. Hey, Kevin, what's going on? Welcome to all the folks on YouTube who are starting with us. Good to see everyone. Okay. As they say here in Liverpool, enough faffing about. I better get to work, right? Gotta earn those donuts. Now, yeah, she probably thinks you're talking to a girl and JJ is code for something else. You're gonna get into trouble, brother. Who are you talking to at 2:30 in the morning? Okay. All right. How could you tell I'm being lazy this morning, right? So, do you remember on Sesame Street they used to have this thing, one of these things is not like the other? Can you tell which one? Well, this morning, look at the size of the range. That's pretty small compared to the ranges that we've had in the overnight. Hey, Terzi, how you doing? Okay. So we've got a smaller range, which automatically tells me, right? When you see something change, your spider sense should automatically go, like Raj, right? You know, there is one quality that has kept me alive. Well, I only died once, but through 33 years, I've only died once in this business, which is not bad, right? Um, and the one thing that's kept me alive is a healthy, suspicious nature. So when you see a smaller range in the overnight compared to what we've had, that means people are kind of going, what's going on? Now, I looked at my email this morning and I did not get any emails from my discount brokerage firm, right? Did anybody get any emails? I think we are okay on margin, right? So that's not it. It's not that we have less people. It's that the market's kind of going, okay, we had tariffs. Now there's an extension. Then there's no tariffs on the iPhones and stuff. So what do we do now? And we had yesterday, if you look at the overnight, we couldn't get over 5,500. And then there's this level here at 54.65 that I was talking about. We looked above it and failed. Okay? So for larger traders, if you are, if you are thinking about shorting, you're, if I was short, say I was a size trader, right? You know, I'm a big gun, I'm trading size, right? My, really, my danger zone is going to be 54.65. If we start getting over 54.65, be careful on the short, okay? For the larger traders, as long as we stay under 37, as long as we stay under these levels here, right, you'll get a look above and fail, which should target 53.06. Now, the trader in me, the settlement guy, the guy that knows that all this buying can be undone in a second, I would be watching yesterday's low and this 53.42 level. So if we do get liquidation, that would be my first and then my second target as a larger trader. Okay? Now, the other thing I'm noticing is this market profile is showing us. Now, I love market profile. I don't use it for execution, but I use it for what we call intelligence, market intelligence. Jim Dalton calls it market generated information, MGI. I like to call it what the hell's going on, right? So what I'm seeing this weird shape profile. The other thing I'm automatically noticing is in the overnight profile, we have the dreaded poor low. So I'm thinking under 5,400, how many poor souls are trapped short here? Because if we have buying competition, which creates a poor low, right? That's kind of, you know, the look above and fail of 54.65, right? That's something, right? But what about the inability to get under 54.10, the inability to get out? There's like a shelf here, right? And then this excess. Now, this is all speculative. These are just observations. None of this has to hold true. But the one thing that holds true is that poor low. And a poor low means that buyers are competing right here, right? So there's buying competition, and those are shorts covering. Okay? That's what creates a poor low, right? A poor low is created by short covering. Let's not mince any words. Let's make it easy for people. Let's take this market profile and let's make the market profile uncomplicated, right? So you don't have to use a lot of double talk when talking about profile. So a poor low means that buyers are competing, and who competes? Shorts, right? Short sellers are always competing at the bottom of a range or a daily, a day's distribution, the low of the day. Why are they there? Because they're trying to buy the cheapest product to cover their short. Just think of two ladies fighting over the last cashmere sweater at Saks Fifth Avenue outlet, right? They both reach for the sweater and grab it and start pulling. That's what a poor low is, okay? It's the same deal. So we know that we have buying competition here. So, and then we get that rotation back up over 54.37 and a half. That's giving me some market intelligence to help us trade through this session. Now, if we get down, when London opens, if we get liquidation and we take out that poor low, right, there goes that theory. Does that make sense? So you got to be flexible. So if that poor low breaks, of course, we'll look at the bottom of that shelf and then the bottom of yesterday's range, okay? Overnight inventory right now is long because the point of control is above the close, right? Overnight inventory is long. We haven't had a significant correction to overnight inventory. Now take a look at this profile. You see, there's our poor low, but check this out. At this level, right? What is this level here? It's 54.25. Do you notice how we're getting lows at 54.25 on these candles, on these half-hour candles? You guys see that? So the short position was here, now it's moved up to here. That's where they're buying competitively. So mark that off in your trading journal. That's your first downside target if you're shorting, right? If you're shorting and the market gets underneath the close, 54.25 is your first target. Makes sense because there's competitive buying there. Do you guys understand that this is how you walk through the structure of a market and find out where the bids are? Now let's go see where the offers are. So the sellers are clearly at this level here, where we're close to right now, just under 44, right? So there were sellers at 38, and we finally cleaned those 38 sellers out. They're allowing the market to lift higher. Now let's see if we stay above 38, or do we come back into this balance zone? Now my balance zone is 33.25 to 37.25, so it's a smaller balance zone tonight. Why? Well, because the range is smaller. Look how small that range is. So the balance zone is smaller. Simple, right? Okay, now let's go see how we can trade this crazy thing. Right? And we will go mark the stops. So I use market profile to find out where the buyers and the sellers are engaging, where the point of control is, so I can see distribution or accumulation. Very simple stuff, practical stuff that helps me trade in the right direction. Okay? Make sense? Are you guys all still with me? Questions? Cool. Just checking. Just checking. Hey, Mike, what's going on? All right. Now I got to do a little advertising, okay? A quick heads up for anyone who wants to level up their trading. Our Microefutures.com trading room is offering a 7-day free access right now, no strings attached. Come see what we're all about. And if you guys want to talk wins, there's a lot of members of our team now that have been consistently getting payouts from Apex and Take Profit Trader, right? That's pretty good, right? Getting payouts is tough. All the info on how to join the room and how to get started with prop firm funding is waiting for you. Don't miss out, okay? Now, Sandy, inventory is below us, right? How do you know that inventory is below us? If you have market profile, the blue crap is the inventory, and it's below price. If we get back into the blue crap, we're back into the cost basis. Here you can see most of the inventory is here, and we are above it. Very simple, right? That's what I like about what we're trying to do here is we take the business and we make it simple, right? So that way you can easily and quickly figure out where you're situated in a market so you're not trading the wrong way, right? So if price is above the cost basis, this is the cost basis of your inventory, right? If price is above that, you are in distribution mode, right? Which means, first of all, it means the price action is going to be crappy because it's a slow night and you're getting this. You can't trade that, right? Very hard to trade. My balance is this candle and that candle. It's a very simple balance, right? So as soon as you see this crap here, go get a coffee. Don't let them suck you in to trading that, right? On a choppier night, you're going to trade less. You're going to wait for that look below and fail. And if you can't get the look below and fail, just chill out. Because as soon as you take a look at this chart and you see a small range compared to all the other ranges, you know, something's going on, right? As soon as you know something's going on, you know the market is waiting for information. It's just kind of balancing, right? It's just kind of hanging out, waiting to see what's coming out of Washington next, right? And also, what is going on this week? What is going on financially when you end a quarter? As I play the music from Jeopardy. Anyone? Bueller? Bueller? Earnings! Right? So we're awaiting earnings. Right? Yes? No? So Tuesday before the open, we got Citigroup, Johnson & Johnson, right? After the close, Interactive Brokers, right? Tomorrow, what do we got? U.S. Bank, Travelers. After the close tomorrow, we've got Alcoa. What else? Kinder Morgan. Thursday, after the close, Netflix. Thursday before the open, American Express. Don't leave home without it. Remember those Amex commercials back in the 80s? Right? So we have earnings. Right? Monday we had the great Goldman Sachs. So when you have earnings, you are going to have people waiting to see what the earnings are like. Now, these earnings were all before the crazy tariff hoo-ha, right? And thank you, Raj. You're right. It's a 4-day week, right? So Friday is a holiday, which I keep forgetting, right? So you have to put some sort of context into what's going on. This way, you're not just blindly chasing trades, right? You understand that you got to save your bullets, right? You want to only trade when your A plus setup shows itself. And right now, what you see on that chart, my friends, is not an A plus setup, right? That price action that you're seeing right now, that's the wholesalers making money, right? They own product under where we are trading, and they're quietly selling it. Quietly selling it. Look how small the candles are, right? Very small candles, right? And our friendly neighborhood quant Mike says Easter is the toughest market holiday to compute. So, what you folks should be doing is winding down, right? What does the smart money, the big money do? As we get to major holidays, do they increase the frequency of their transactions? Do they push risk? No, right? They ease off. That's what you need to be doing too. Now, I'm not saying don't trade, right? Far from it. What I'm saying is take only the trades that make really good business sense so you don't overtrade and have a really crappy 3-day weekend. Make sense? Be smart about it, right? So the market has changed, right? We used to have, it was slow, and then it sped up, and the ranges got insane. And then some news came out, and things slowed down again. So every time a market slows down, whether it's on a daily time frame or a minute by minute time frame, it means you should go heads up. Don't just jump in. Just like when a market gets really volatile, don't just jump in. Sit back and go, this is what's going on. There's earnings. There's a long weekend coming up, right? So people are going to try and get all their business done in the next couple of days. And some will leave business till next week. That might create a slower market, which for us as retail traders means maybe not as good opportunity. Like if you look at these candles right now, for the last 20 minutes, not a lot of opportunity for a trade, right? Look at the size of the candles. There may be a point. There's not a lot of meat on the bone here, right? You agree? Yes? There's nothing going on, right? Yeah, right? They're taking the inventory from here and they sold it here. That price stability brought in buyers. Now let's see if we now look, we finally caught a seller, right? And the market's starting to sell off. Now, I know a lot of you are going, okay, I'm short, I'm short, I'm short, right? And if you're thinking short, you're looking for 37 and a quarter, right? Because I tell people, like, just chill out, but I know people will trade. So we had a constant seller under 40, right? Now, do we look below 38.5 and come back up, right? Do we look below 38.5 and come back up? Or do we go down and take out 37 and a quarter? So say you're short at 39, right? Put your stop here above that red line and put some bids down here before 37 and a quarter, right? Thanks, Kevin. So we have a lot of economic news on Wednesday and Thursday. So today might be kind of a, let's take a bit of a breather. You know what I mean? This is hard to trade. Chop is hard to trade, right? If you get chop in like an 8-point range, then you can trade it. But when chop is like really tight, it's very hard to trade. It's very hard to time the breakout from chop. Tariff announcements do influence my setups. So when they announce tariffs and the market starts going crazy, I do not trade. That is how they influence. Once the price action settles down, yes. I have two basic setups, Tudor. I have the look below and fail and the look above and fail. Both of those setups are based on common sense business practices. The lack of supply or the fact that suppliers are competing and lowering price. Those setups I will take based upon what the price action is like. And of course, risk is the primary thing. I don't care about reward. I know that after 33 years, all I've got to do is be here tomorrow to trade. If I don't make any money today, that's okay. I don't care. All I need to do is to be alive tomorrow and have money to trade with. Does that make sense? So tariff announcements do influence my setups because I'm a retail trader, right? I'm a retail trader. I have no influence on price action. The only thing I can do, smart money concepts, is to not make stupid business decisions. Make sense? Every trade is a business decision. So if you're trading and the market is chopping around like this, is that a smart thing to do? Does that make sense? Hope that answers your question. So if you guys tell me, at 2 o'clock, the president's going to be talking about tariffs, I'm flat at 2 o'clock. I am not. I will make sure I'm not in a trade. I don't trade around announcements. I don't trade around news, and I don't try and trade earnings. That's all for suckers, right? I like nice, boring trades where I can do, you know, the market looks below 33 and a quarter and fails. I buy some at 34, 34 and a half, put my stop here, and sell when it gets up to 37. Thank you very much. Goodbye. Right? What's the purpose of chopping in a tight range? Distribution and accumulation. Basically, the purpose is business is slow, Luke. So in the old days, if I called a market maker, right, and I said, hey, what are you doing here? What's going on? He'll go, yeah, it's slow. I got some orders here from Schwab. I got some orders here from E-Trade, but I'm just both sides. What do you want to do? Right? Which means there's not much going on. I've got a few little small orders in here, and I'm both sides of this range. So I'm the bid and the ask. You want to buy some, I'll sell you some. You want to sell some, I'll buy it off you. If you got a big order, let me work it. Because it's kind of slow. I can't lay it off to the book is thin. You know what I mean? So chop means business is slow. And the market makers are just both sides. So here they were both sides of 38.39. Now they're both sides of 37.38. Right? That is business for them because they don't pay commissions. Right? And they run 1,000 contracts through a 2-tick spread. That's good money. We can't trade that way. Also because we don't have the order flow. It means retail isn't participating and other wholesalers and hedge funds and prop traders, and it's just a slow day. Like, you ever go into 7-Eleven at 3 o'clock in the morning and the guy behind the counter looks like he's fallen asleep? And you get that one hot dog going around the rotisserie and it's kind of burnt and it looks very lonely, right? It's just a slow night in Walmart. It's a slow night in 7-Eleven. Now London is opening. Let's see if they can bring any caffeine into this action. Right? So see how it's kind of chopping back and forth between 38 and 37? I don't see a trade here. Right? If you're long, you're looking for sellers at 39 and a half, 40. There they are. Hello, right? If we lift, that means they've seen buyers and they're going to lift up to about 41 and 3/4, 42. That was a choppy look below and fail of 37 and a quarter. So since I just drew these levels out literally before I started, right? I want to see where the bids are. Now I can see, hey, Sandy, are you there? Do you see how that we came down to the cost basis, stopped selling, and went up? Nice, Chris. Nice. Right? Because the position's underneath us. So that just confirmed it for me. Right? So even though I didn't take the trade, now I understand that what I'm seeing is proper. Right? And we knew that there was going to be some sellers up here near the overnight high. Let's see if we can actually get up there. Otherwise, we're going to get rotation back down. And it's going to chop around back and forth in this area here. Right? So that's how you read a market. Right? And don't be worried if you miss a trade. There's going to be thousands of trades. Okay? Never ever be upset that you miss a trade. Right? Over a 5-year period, you're going to miss lots of trades and nobody really cares. Right? Now let's see if we can take out that overnight high. If enough people are trapped short, under 38, we'll force that overnight high to break. Let's see. And if we take out the overnight high, you'll be looking for that 48 level. Okay? So I color the levels. Blue is the cost basis, green is 2 times profit, purple is 4 times profit. And then if it goes past the fourth, past 61, then I'll just switch to green and I'll go 8, right? Just helps you keep, right? So if you're buying, right, if you're buying at 16 times cost basis, do you really expect a huge move? Just helps you manage your expectations too, right? So we took the overnight high. So if we hold over the overnight high, which we're not right now, right? Because they're selling into it, right? Because when you take that old overnight high, it creates buying. And as soon as that buying is created, there are people who are waiting there to hammer into that. That's why the market does this. That's what creates a false breakout, right? For you breakout traders, when the market breaks out, there are stops here that get executed, buy orders from short sellers, right? So those buy orders get executed, so opportunistic longs will be sitting there waiting to sell into that, right? That's how you sell product, right? You create the buying by running the stop. Now, if we stay above that overnight high, look for 45 and a quarter and then 49 and a quarter, right? And your upper stop is going to be 48. So that's close to that 49 and a quarter. There you go. So if you're long, right? Say you're long over the overnight high, right? Sell into that strength, right? So you're long 44 and you sell into the strength at that stop at 48. There you go. Right? And if you have more product, that's great. If it holds over 48, just use the levels and sell into the strength, right? Work nice, right, Mike? Yesterday's point of control is up here at 64 and a half, just so you know. The overnight session is great to get rid of inventory. Yeah, it's thin, right? It's thin. That's okay, right? Make a couple of points, right? And now we're in pure distribution. Or as my buddy Addy would say, distribution. Right? JJ, we need big, big distribution. Right? So now we're going to take this cheap crap from underneath 54.42 and we're going to use the people who are caught short, right? Because you can bet your sweet patootie that there are people caught short under 44. And they are going to hold the market up for us while we distribute. See, and when you have people trapped short, you can really, really jam something. And now we'll go, just in case, I'll put 8 of these on top of each other. So you can see that that's 8 times cost basis, which is the 8 times profit zone, right? So now we are utilizing those trap shorts to get rid of our inventory. Now we're going to backfill. So we ran out of buyers at 57. So we put it on sale. Now when we put it on sale, let's see where we find some buyers. Because where the market finds buyers, it will then lift the offer and move back up off of it. Okay? So on sale, finds buyers. Now it's going to raise price. Right? So they find some buyers here. And we're going to try and get them to chase up to 53. If they don't, then we'll come back down under 49 and a quarter. See? We're trying to entice them to pay more. So that red candle is what we call a backfill. Right? You take a market higher to create demand. Right? So you've gone and you've created demand. Now you go back and you fill in that demand with supply until you find a really big set of buyers here. When you do, you stop selling and you make them chase price higher. And now, of course, this is all done electronically, so it's insanely efficient, right? Because the 0 and 1 mafia, guys like Mike, write these execution algos that allow this thing to trade, I don't know, do 300 trades in a second kind of thing. So that's what the algos are doing. They are speeding up and making the market more efficient so we can sell more quickly and sell it faster than the other guy, right? Because remember Scarface, where they said never underestimate the other guy's greed? Remember that rule in this business. Never ever underestimate the other guy's greed, okay? Ah, new cruise ship in the harbor here. Cool. Right? It's true, Sandy. Never underestimate the other guy's greed. See, we got some bids right here at 50. Right? Right here. And now, remember what we did here, that distribution? We're going to do it here. Back and forth, back and forth. Get rid of the product. Get rid of the product before, like if I'm selling here and Mike's selling here and Luke's selling here, well, we want to make sure that two things, right? We want to sell, but we don't want to scare away the buyers and make us sell cheaper. So we're just kind of, we're competing, but we're competing not aggressively. So now say Sandy comes in and goes, hey, F you guys, boom, and sells aggressively, we're all going to have to price compete with him, right? But that's distribution. You go from accumulation into distribution. And if you have to, you put it on sale back to cost basis. So if you're a short seller and you're short, say, under 53, right? As long as the tops of these candles keep going lower, you're okay. But you should notice that there are bids here at 49.25, right? So put a bid underneath 49.25, go 49 and 48 half bid and see if you get hit. That'll tell you whether there's supply. That's how big traders trade. They'll put orders out, and if those orders don't get filled, then they know they have to adjust their business, right? If I'm short and if I'm short at 53, right, and if I put buy orders at 54.48 and a half, and I can't buy any at 48 and a half, I'm going to have to move my bid up, right? And that's what creates that chop. That's what you're seeing now. See? Now let's see if they sell into it at 43. That's if you just sit and watch, right? I know everyone's jonesing for a trade. It's been a tough month. But if you can actually sit and concentrate and watch the price action, you'll be surprised at how much information a 1-minute candle chart will give you. Right? It'll tell you where the buyers are and where they stop selling, and when they start to lift the offer, if you're short, you can get the hell out of Dodge before you lose all your profits. Does that make sense? So if you were short 53 and you couldn't get filled underneath 49.25, flatten the trade if you're a small trader. Right? And if you're long, sell into it at 53. Good. 53, 54. Good stuff, Sandy. Right? That's a scalp trade, and it's not an A-plus setup. So don't overstay your welcome in the long. Great that you sold it. Beautiful. Right? If you're scalping a range like this between 49 and 53, don't get greedy. You know where the sellers are. You know where they stop selling. Boing, 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 boing. You can take it. But don't overstay your welcome. Know what I mean? Right? Good, good. Boy, YouTube's really quiet. There's nobody in the chat. There's just two people. I think this market's worn everybody out. No problem. Hey, Patachi, what's going on? Hey, Borneo Trades. I'm just checking in. Sometimes, I tend to put people asleep, so I just got to make sure everybody's still awake. Now, if we get good distribution, we're going to take that overnight point of control, right, and move it up from 54.37 up here, right? Hey, Windmill Willie. I like that name. Reminds me of Boxcar Willie. New viewer, welcome, welcome. Most people are too young to remember Boxcar Willie. He was a classic. Hey, RC. I think, for those perma bears who are really shorting the market, I think if we stay under 54.64, you're going to be all right. Right? Just make sure that you don't, blow yourself up on risk. Right? I'm looking for a move back down. I just don't know when we're going to get it. And I don't see any sellers right now at this moment. So we'll see. See that, Sandy? See that distribution? right? Right, we're taking that and we're selling it up here, right? And the point of control is about 1,100 contracts. So we still need more people to come in. So they stop selling there's at 49, right? And if we get enough people trapped short up here, we'll be able to push the envelope a little bit, right? Let's see. Ooh, look, stop run. Hello, right? That's why you got to be careful shorting, right? If you cannot identify a seller, right, don't short. I do not use low volume nodes for trade location. I do look at them just for market awareness. What I do for trade location, it's really simple. If I'm looking to go long here, my stop's under 49 quarter, right? Say I'm long 50, put my stop at 49, sell a little at 53. I wasn't expecting that move, so I probably been out by 53, 54 because I know that there was a seller here, right? That's okay. Now, Sandy, you've had one good trade, right? What do you do now? Don't overtrade, right? So now just cool your jets, right? Take a break between trades, right? Take a break between trades because as soon as you start making some money, right? And it's what time? It's 3 in the morning, right? In New York, right? It's 20 after 3. You should be going to sleep, right? So shut her down, right? There is no such thing as DOM strategies. I do not use the DOM. I use the DOM to put orders in. DOM strategies is a marketing thing because Patachi, no large trader would ever show their hand on a DOM. That'd be like sitting at a card table and showing everybody your cards, right? So unless a trader is on a 3-day Coke binge, they're not going to show you what they're doing on a DOM. So what I do is I teach people how to use simple, common sense information to make good business decisions, to manage their risk and make money. I don't I don't like to waste people's time. And my old career was manipulating the level 2 to sucker you guys in, and people would think they knew what was I doing, and I would control the entire level 2, like every single market maker, right? So people who thought that they understood level 2, I would just eat them for lunch, right? So all of that stuff that people are trying to teach you, DOM strategies and footprint strategies, that's all marketing. And very few of them are actually going to care that you make money. What I teach you is a simple way to trade using common sense and no double talk. I don't use stupid things like, what was yesterday's thing? Liquidity sweep and all that crap, right? It's all a bunch of nonsense that's not going to help you make money. Have a trade execution plan that your risk is built into it. Identify where the sellers are and where they stop selling, right? Practice simple trades 500 to 1,000 times, right? That's all you need to do, right? Most trading education is if you can't dazzle them with your brilliance, baffle them with your BS, right? I've watched a lot of those videos where people are talking about what's going on the DOM, and I just start laughing because they're just basically spouting a bunch of BS, and they've never traded size. So they have no clue what's going on the dump. Does that help? Right? I don't mean to bash people, but your time is valuable. Don't waste it. Right? If somebody can't tell you the business reason for a trade and why you should be getting out of a trade if the business reason fails, they're full of it. There's 61 and a quarter. Seller stepped in at 61 and a quarter, right? No, when they talk about tape reading, what they mean is the time in sales. So this is the tape, right? And this is how we used to trade on the old days, right? So if we were selling 61, as long as the ask is going lower, right? 57, 57 quarter, 57 3/4, right? 57 quarter, right? You're okay if you're short. Say you're short 58, right? As long as the offer is under where you're short, you're okay. If that offer starts to lift, oop, there you go. See? Watch the offer, watch the offer, watch the offer, right? But it's a lot easier to see the offer on a chart. Don't fall for all this marketing, okay? Some people look at all that stuff, but I don't care about all that. All I care about is where's the inventory, right? Draw out my levels. We have a simple 5-step method of analyzing, testing, and trading the market, right? So if you come into our room at Microfutures, there's a document you can get. It's a 5-step method. It's really simple. We go through the same thing every day, so we're not chasing things all over the place. I teach you how to read a 1-minute candle chart. Market profile is nice. You don't have to have market profile. There are a lot of people who look at the sessions like Asia and London and New York and the highs and lows. My thing is, how much information do you actually need to make money? And how much information is too much? That's going to confuse you when you're in a trade. How many things can you keep track of when you are under live fire, Tarzi? So if I'm short 60, right? All I need to know is that the sellers are pushing lower and lower and lower and price competing. Doesn't that sound more simple? Right? So if each 1-minute candle, the highs are getting lower, I know there's price competition and I can stay short. And I can just put some bids in here and cover. So if I'm short 59, 60 against 61 and a quarter, come in here and start covering. Very simple, right? You should be able to explain this to a golden retriever. If your trading coach cannot explain this in a simple manner and explain why the business reason exists for you to be in a trade. Here the business reason is people have to sell lower to capture the buying. So the sellers are competing, which means you should be short. It's a look above and fail of 61 and a quarter, right? If you were to notice that your balance levels aren't working, do you go back and find a new cost basis? It never happens. Now, Chris, the reason it never happens is because I spent an entire year drawing balance levels and watching them before trading on them. Right? So you can do that, but that's why I want you guys practicing to draw those balance levels over and over and over and over and over, right? So you get your balance levels. You understand there's a business reason why you're taking the trade. If that business reason does not hold true, you get the hell out of Dodge, right? So if you were short 59, right, 61 as your stop, buy some back here at 53 3/4, 54. That's 5 points. 5 points on one E-mini contract right, is $250. On 3 contracts, that's $750. You do that trade once a day and manage your risk, you're making some decent cash. And you don't have to be up for 18 hours watching every single tick, right? You actually get to go and enjoy your life. Take your trade, get your money, and go have some fun. Enjoy life. You don't want to be sitting in front of these screens for 20 hours a day. Trust me, I've done it. I didn't take a holiday from 1995 to 2022, okay? All I did was work. It really wasn't worth it, right? I want people to make money. I want people to manage risk. And I don't want to subject them to a whole bunch of BS, right? Because trading is simple. It's not easy, so we have to keep practicing and practicing our setups. Markets change, so we have to learn how to adapt to change, all while managing our risk. Okay? So the next period's going to open in 3 minutes. When that period opens, we are going to have what we call single prints. And the single prints are going to be from the top of this period here, right, to wherever it opens, and it's going to show us where the shorts are trapped, right? So just keep doing those balance zones over and over and over and over and over again till you'll get sick of it. Do it on a 1 minute, do it on a 5 minute, do it on a Nvidia, do it on Microsoft, right? And eventually, every time you look at a chart, I don't even have my equity stuff open. Every time you open a chart, you're going to see balance, right? Just like, that game that you guys play with the Volkswagen Bug, right? See you, Patachi Trader. Have a good one. I miss going into an office. I know everybody thinks I'm crazy, but well, I miss having a trade desk. That was fun. It's the real reason why I started these rooms and stuff. So I could talk to people during the trading day. Otherwise, it gets really boring when you're just sitting there by yourself. Yeah, it is nice. See? Distribution, right? So keep these concepts, right? I just get bored, right? I miss trade desks. I miss playing practical jokes on other traders and, you know, how long do you treat the initial blue cost basis? Through the whole day, Luke. Remember, we're still the business never changes through the day. So in the morning we have inventory and we put it on sale at higher prices, maybe come back down to it, then bounce off of it. So we're always doing the same thing, right? In fact, you can do balance zones from the day before and keep them and keep expanding them if you want, especially if we have inside days. I just like to do them every morning to keep my mind fresh, and I want the latest information. So I have a process that I do. It also helps me from getting lazy, which I tend to be, right? I am lazy and undisciplined unless I force myself to be disciplined. That was the hardest thing I had to do when I started retail trading was be disciplined because as a liquidator of large positions of stock, I didn't have to be that disciplined. People would come in and buy, I'd just sell it to them. Great, right? You may sell $100,000 worth of stock before everybody wakes up. Thanks very much, right? Now I'm just done, right? So here is our short position, right? 54.43 quarter to 54.50, right? And as the market backfills, we're going to see where the shorts are trapped. That green box, that's where the shorts are trapped right now, right? So that's it for me. Thank you, everyone. I really appreciate you coming out and watching. Yeah, sure, Moran. Cool. Come join us at Microefutures, right? I promise you, you'll learn more with us than you will anywhere else of practical information you can use, okay? I guarantee it. Thanks, everyone. Have a wonderful morning. Those of you in New York, go to sleep for crying out loud. Thanks. We'll see you at RTH at 9 a.m. Eastern Time. Bye for now.